Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So in this video, I'm going over 3 stocks that I'm watching for February 2018. So I do have another video of last month, which was January of 2018. If you're interested, I'll leave a link in the description. But I have 3 stocks for that, so I'll give you a quick overview of how they did for the month of January so far. So let's do a quick recap, starting off with Corning. That was the first stock that I was looking to buy and actually got in at like the best time. It was great. But this chart shows the 1-year change. Last year they did very, very well. But so far for this year, January is not even over yet when I'm recording this video. But so far it's over 8% already. And the overall market so far this year is doing phenomenal. But I actually got in such a great time because I had a limit order. What a limit order is once it goes below a certain amount, you get in. So like the last hour of trading in 2017, a lot of things dropped, and that's when I got into Corning. The second stock that I was looking to buy in January was Disney. They had an interesting year last year, but so far for this month, they were just under 3%. And last but not least, for last month is Visa. Visa is such a great company. I love them. Last year, of course, you can see it did really great. This year so far, up over 7.5%, so looking strong. So that's a quick recap for the stocks of last month. I'm still watching these stocks for the future, so like in case they drop for whatever reason, since I do like their business and their structure and all that, if they go on sale, I'll probably get in. So that's enough about that. What's going on now? Well, the first stock that I'm looking at for February of this year is Facebook, guys. What really attracted me was this was a chart for last year. Last year they did great, just like basically everyone else. So far for this year, they are up 2.74%. But if you look at the very end of that chart, it was like a week or two ago that they dropped by around 5% in one day. So basically at this point, since 2017 was so great, there are a lot of expensive stocks out there. So with any type of drop, like Facebook kind of had of 5%, I mean, that's not like a huge, terrible drop to get in at like a really good price. But 5% is a drop. They dropped because they were altering how they're going to structure their news feed on Facebook. So instead of having kind of like advertisers or businesses with their ads, it's going to be more focused toward like people's friends, their family, and the groups that they follow. Now, obviously, investors didn't really care for that, so it dropped by that percentage. So it's, you know, if you could definitely trade it if you want, like it could easily rebound back. But Facebook is still an amazing business and it could grow further from that. So this might be a pretty good buying opportunity. So that's why I'm looking at it. Of course, they also still own Instagram. So as a social media platform, they're doing very well. So the future is looking pretty strong. So speaking of dips, the second stock that I'm watching for February is Cirrus Logic. You could see their chart for last year. Definitely interesting year. Year to date is under 2%. So nothing really crazy. I mean, you can see the chart is ups and downs, but it is down at this point. And what interests me is, especially recently, they went down even more, is because they're an audio company dealing with Apple. So every iPhone has audio components inside the phone. So these audio components Cirrus Logic makes. So essentially, if iPhones sell more, Cirrus Logic will do more business, obviously. The one risk that Cirrus Logic does have is that Apple is their main company that they deal with, their main supplier. I believe I read it was 79% of their business. So that's good and bad. If Apple does good and sells a bunch of new iPhones, especially with the iPhone X, then Cirrus Logic's going to do just fine. The problem is, if let's say Apple just drops Cirrus Logic, that's a huge hit for the company because that's majority of their business, so that's where the risk comes into play. So it does depend on your risk tolerance. I do think that is a pretty good play. Now, a bunch of people are saying iPhone X's are kind of less than expected demand. I mean, that's why Cirrus Logic is down. That's why Apple itself is kind of not like flying off the charts. I mean, they're still good companies, but people are kind of expecting more. So like over the long term, if you're looking more stepping back and seeing what's going on, they're still going to be selling iPhones, guys. You know, they're still innovating with their audio technology, and, you know, especially there's so many things that are done with audio. You know, there's now Amazon Alexa, that's with voice commands and stuff like that. So it's definitely a growing business. So I'm definitely keeping an eye on them, seeing if there's any big moves. This might be a very long-term play. There might be bigger moves coming, like maybe 1, 2, or even more than 2 years into the future until it starts like becoming a good investment. So we'll just have to see. Now, Apple is a great company nonetheless as well. I would have put this as my third stock, but I think Apple is kind of just, everyone knows Apple. It is a good investment. Right now it's at a pretty fair valuation. They have a dividend. Their growth is great. So as a side note, I guess it's honorable mention, but Apple is a great company as well. If you're looking to invest in a company, Apple is pretty solid. And by the way, these companies' balance sheets are really good. Of course, Facebook, they have like more money than, not everyone, Apple has more money than anyone, but you know, Cirrus Logic has a really good balance sheet. But moving on to the third stock that I'm looking for February 2018 is a little bit of a change. It's not a regular normal stock. Now, there are earnings coming up toward the end of January, early February, so I kind of want to see what's going on with all companies out there, basically. If there's any type of dip for a company that I'm looking at, or a large company like maybe Apple or Amazon or, you know, whatever, that would be a good buying opportunity. But I was thinking, what should I do for my third stock? And I wanted to switch it up. So the third stock is Realty Income. So first, let me just show you what Realty Income looks like with their charts and everything. Realty Income, you could see last year wasn't too hot. Ups and downs, year to date so far, they're not doing too hot either. So that could be an opportunity, right? So let me actually tell you what Realty Income is. It's not a normal stock, like I said. It's not a normal company. Realty Income, ticker symbol O, is a REIT. R-E-I-T, that is a real estate investment trust. Now, I used to own this a couple years ago, and I got out of it just because it's kind of a dividend play. So real estate investment trusts, it's basically a company that buys real estate, and it's a dividend play because by law they have to give out minimum, I think it's minimum of 90% of their income towards shareholders, like dividends. So essentially it's like getting rent. So if you want to kind of diversify away from the stock market, let's say, and get into real estate using the stock market, a REIT, or real estate investment trust, is a decent way to do it. So Realty Income owns over 5,000 like commercial real estate buildings and stuff like that. So you're basically getting rent from there. We can see that they do have a dividend larger than normal companies. Their dividend, you can see, is just under 5%, and that's what makes it very interesting, which is why it's more of a dividend play. So Realty Income, it might not have like huge, tremendous growth behind it, but I kind of wanted to get outside the box and show you that there are other things outside than like normal stocks in the stock market. So it's not, like we said, huge growth, but you're getting rental income from it. You're getting income, dividends. Now what's cool with Realty Income is that they've been paying for like decades. They're part of the dividend aristocrats. They're very trustworthy. They've been paying forever. They pay, which is also interesting, they pay every single month, which is pretty cool. And I believe it was last week that they increased their dividend 4%. So the stock market might go up, it might go down, but that has nothing to do with Realty Income. It's kind of a separate entity. So if stocks go up, Realty Income could do something completely different. And same thing if stocks go down, REITs could do something completely different. So it's definitely something to think about. Like we said, it's a dividend play. The price could really go wherever. If the real estate market does bad, so will REITs. But you still do get that technically rental income. It is down like we saw before, so you could make a capital gain through that. And just a word of wisdom for the dividends that you get from them. It's not taxed like normal dividends. So normal dividends from like a stock. Let's say you own Apple and you get the dividend from them. Depending on your income bracket or tax bracket, I believe the tax rate is either like 10 or 15%. So it's actually lower than most tax brackets. With a REIT, just because it's kind of considered rent, it's actually taxed at normal income. So if your tax bracket is, let's say, 25%, to make it easy, you have to pay 25% on taxes from their dividend. So a little different. So otherwise, guys, those are the 3 stocks that I'm watching for February 2018. We got Facebook, Cirrus Logic, and Realty Income. But something will definitely come into my radar, I'm assuming, during earnings season. If something drops, I'm definitely, possibly might get into whatever does drop. So keep your eyes open, guys. So if you have any questions, comments, concerns, please leave them down below. I love to hear what you guys have to say. Hopefully you guys kind of appreciate how I kind of was a little bit different with that third pick. I normally don't look at REITs, but it does diversify away from just stock market stuff. So let me know what you guys are watching. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we could get a hold of our money and stop following the man. So thanks so much for watching, and I'll see you in the next one.